Hi everybody, it's Coach Mo. Just got back from my morning workout, a little bit sweaty. When I was going for the morning workout, I was just thinking today is a big day in the finance world. If you know anything about the FOMC, and that is the day where a group of people meet together, they decide on if they're going to cut the interest rate in America or not, and if they're going to cut it by how many basis points, meaning by how many percentages are they going to reduce it. So what does that really mean for your finances? Why is the whole world almost at a standstill anticipating what the Federal Reserve is going to do? Okay, the Federal Reserve, that's the central bank in the United States of America. And as we know, more than 60% of the world, the de facto currency is actually in dollars. So this is quite a global thing that everyone pays attention to. So what does that mean? This is what it means. It means if the Fed don't do nothing, that means they hold the rates, everything continues. However, the market is going to be disappointed because the market is anticipating and it's taking some clues like they should cut the rate based on where we are right now. That's the first scenario. The second scenario now is if they cut the rates, the question there is, will the cut be enough according to what the market is anticipating? So that will determine which direction the market is going to go. And the third one there is if they surprise everybody and they cut the rate, say, by 0.5%, that will make the market go nuclear because the market is actually not expecting it. So those are the three scenarios. Number one, no rate cuts. Number two, rate cut but very small. Number three, a huge rate cut. So let's see how this pans out. What does that mean? If there's no rate cut, things continue. The market will dump a little bit and the market will pick up again. And let's see what happens in October. If there's a small rate cut, the market might react negatively initially, but the market will soon realize that it means the mortgage rate goes down, the rate of lending goes down. That means there is more money that is in the money market that actually is looking for better returns. So that means there's going to be more money, especially within what they call the risky assets, and that's the stocks and crypto, and probably maybe not really bond. I'm not sure bond is going to benefit really from that. Well, gold is staying on the standby that the market doesn't like what happens, then gold is going to continue from 6,700. Maybe we don't know. We might get a 6,800. Who knows within the next couple of weeks. So that's the short update on what's happening in the market. I'll keep you posted, let you know eventually when the rate is cut. What does it mean? And to me, it's usually wait about 2, 3, 4 weeks after the rate decision or no rate decision to see how the market is eventually responding to that. Now, this is what I think, and I think the market thinks about this. That I'm going to get a 25 basis points. What does that mean? In simple English, 0.25 rate cuts. And the market might not like it so much because the market is already expecting that. But that is going to be a huge news. There's been no rate cut in 8 months. That's a long time. So stay tuned. I'll keep you posted. God bless.